The head of America's central bank has hinted on the probability of an interest rate hike next month. Fed Chair Janet Yellen says it could become appropriate relatively soon. But she's admitting that her job has been made that much more complicated by the election of Donald Trump. Our Washington correspondent Daniel Ryntjes asked Professor Harry Broadman, the director of the Council on Global Enterprise and Emerging Markets at the Hopkins University, of his assessment.
That's painting the answer with a very broad brush, and one needs to really dissect from country to country, distinguishing between the exporters of commodities and the importers of commodities. And the higher rate rise will translate into a stronger dollar, and so that will have a very different impact on which type of country is engaged in the economic activity. And also, let's keep in mind, I think, that the size of the rate rise is going to be 25 basis points, which is 0.25%, or maybe 0.5, half of a percent. So this is not a huge change in rates, but it could have, just the change itself could, have more of an impact on investment decisions.
Investment decisions that some people think will pull a lot of money out of emerging markets, investors deciding that they'd rather plonk it all over here. Does that have a big impact? Does it have a potentially damaging impact?
Well, certainly to the extent that this is aimed at, the change in rates is going to affect and aimed at short-term investment, financial flows on currency-related things, but long-term foreign direct investment is unlikely to be affected.
We do know that there is concern, particularly among those countries that have very strong dollar borrowing. They've had a long time to get used to this, but still there's some exposure there. Do you expect to see some renegotiation of the debt away from dollar-denominated debt?
But I think your first point is certainly well taken, that the markets have already, assumed this, right? So it's not going to be too much of a surprise. But yeah, I think the debt servicing is going to be more expensive because it takes more amount of local currency to, pay off dollarized debt.
And the last thing I wanted to ask you is that what the unknown is at the moment is everyone's scrambling to understand how this Trump administration is going to work. Some people saying that it's going to have a big inflationary impact and therefore ramp up the pace in which the Fed decides to raise rates. Do you buy that?
Well, I think if he becomes serious about financing infrastructure, which I believe is long overdue in this country, that's going to be done through fiscal spending. How that finances is another matter, and therefore the inflationary impact of such spending will depend so much on the composition of how that's financed. I'm prepared to live with a little bit of inflation as long as it means an investment in the resilience of growth of these economies.